Let me ask you something. You've been told your whole life to build a good credit score. Pay your bills on time. Don't miss payments. Keep your debt low, right? But here's what nobody ever told you. Your credit score was never built for you. It was built for them. Right now, as you're watching this video, 3 companies you've probably never heard of know more about your financial life than your own parents do. And they're selling that information every single day. And the worst part? You never agreed to it. You never signed a contract. You never got paid. So before you check your credit score one more time, watch this entire video, because what I'm about to show you changes everything. So growing up, most of us were taught the same thing. Get good grades, go to college, get a job, and build your credit score. It was presented to us like this golden number that determined your worth as a financial human being. A high score? Banks love you. A low score? Good luck renting an apartment, buying a car, or even getting certain jobs. Yes, employers check your credit too. But here's the question nobody ever asked in school. Who invented the credit score? And more importantly, why? Because when you understand the origin of the credit score, everything about the system starts to make a lot more sense. And spoiler alert, it wasn't created to help you build wealth. It was created to help lenders make money. There's a huge difference. The modern credit score as we know it was popularized by a company called FICO, Fair Isaac Corporation, back in 1989. Before that, lending decisions were made locally, often based on personal relationships and, honestly, a lot of bias. FICO came in and said, let's create a universal numerical system to measure how risky a borrower is. Sounds fair, right? And on the surface, it is. But here's what they don't tell you. FICO doesn't work alone. They work with 3 massive companies called credit bureaus: Equifax, Experian, and TransUnion. These 3 companies collect your financial data, every loan, every payment, every missed bill, and they package it into a report. That report becomes your credit score. And that score, it gets sold to banks, insurance companies, employers, and data brokers, anyone willing to pay for it. You are not the customer in this transaction. You are the product. Let's talk about Equifax, Experian, and TransUnion, because most people have heard these names but have absolutely no idea what these companies actually do. These are private, for-profit corporations. Nobody elected them, no government created them. They simply exist to collect your financial data and sell it. Equifax alone reported over $5 billion in revenue in a single year. Experian, over $6 billion. TransUnion, over $3 billion. That's nearly $15 billion combined, built entirely on data that belongs to you. And here's the kicker. You have no choice in this. You can't opt out. You can't tell them to stop collecting your data. The moment you open a bank account, take out a loan, or get a credit card, you're in the system forever. And these companies have made mistakes too. In 2017, Equifax had a massive data breach that exposed the personal information of 147 million Americans. And what happened to Equifax? They paid a fine and kept operating because the system protects them, not you. Let me break down exactly how this works, step by step, because once you see it, you can't unsee it. Step 1, you go about your financial life. You pay rent, you use a credit card, you take out a student loan. Step 2, your bank, your landlord, your lender, they report all of that activity to the 3 credit bureaus. Step 3, the bureaus compile all of that data into what's called a credit report. Step 4, FICO takes that report and converts it into a 3-digit number, your credit score. Step 5, and here's the part they never talk about. Banks, insurance companies, employers, and data brokers pay the credit bureaus to access your report and score. Every single time someone pulls your credit, that's a transaction. money changes hands, and none of it goes to you. Think about that. Your data, your financial history, your behavior, packaged up like a product on a shelf and sold to the highest bidder, and you don't see a single cent. Now, you might be thinking, okay, banks use it for loans, I get that, but the reach of your credit score goes way beyond borrowing money. Let's talk about insurance. In most states, insurance companies use your credit score to determine how much you pay for car insurance or home insurance, not your driving record, not your claims history, your credit score. Studies have shown that people with lower credit scores pay hundreds of dollars more per year in insurance premiums. Then there's housing. Landlords run credit checks before renting to you. A low score can mean rejection, even if you have a steady income. And then there's employment. Many employers, especially in finance, government, and management roles, run credit checks as part of the hiring process. So a low credit score can literally cost you a job. This one number, calculated by a private company based on data sold without your direct consent, controls where you live, what you pay, and where you work. That's an enormous amount of power for a system most of us were never properly taught about. Here's something that doesn't get talked about enough. The credit score system has a built-in bias problem. Studies have consistently shown that Black Americans, Hispanic Americans, and low-income communities have disproportionately lower credit scores, not because of poor financial decisions, but because of how the system was designed. If you grew up in a household that paid everything in cash, paid rent on time, but to a landlord who didn't report to the bureaus, or simply never had access to a credit card, none of that positive financial behavior gets counted. But one missed medical bill, that goes straight onto your report. The system rewards people who already have access to credit and penalizes people who were never given that access in the first place. It doesn't measure financial responsibility. It measures your participation in a system that wasn't equally available to everyone. Okay, so now that you know all of this, what can you actually do? Because knowledge without action is just frustration. First, check your credit reports for free. You're legally entitled to one free report from each bureau every year at annualcreditreport.com. Check them. Errors are more common than you think, and a single error can drop your score by dozens of points. Second, dispute errors immediately. If something is wrong on your report, you have the legal right to dispute it, and the bureau must investigate. Third, understand what actually moves your score. Payment history is 35% of your score. Credit utilization is 30%. Length of credit history is 15%. New credit inquiries are 10%, and credit mix is 10%. Focus on payment history and utilization. Those two alone can dramatically change your score. Fourth, freeze your credit when you're not using it. This prevents unauthorized access to your report and reduces your data exposure. Fifth, stay informed. The system is slowly changing. New models like Ultra FICO are starting to count things like bank account history. Advocate for better policies. Your voice matters. Here's the truth. The credit score system isn't going away, and it's not entirely evil. Having a way to assess lending risk does serve a purpose, but you deserve to understand exactly what that system is, who profits from it, and how it shapes your life. You were never supposed to be just a number on someone else's spreadsheet. You were never supposed to be the product in a billion-dollar data industry you never consented to. So the next time someone tells you to just go build your credit score, remember this video. Remember that you are not the customer. You are what's being sold. And the first step to taking back control is simply knowing that. Share this video with someone who needs to hear it, because this is exactly what they never taught us in school.